Troy Boisjoli, CEO of ATHA Energy Corporation. We are a large-scale uranium explorer with the largest land position across Canada and an advanced resource in Angilak. Thanks for having me, Matt.
Good to have you back, and happy New Year to you, sir. Right, 2024, weird year, strange year, I think. Fair to say. When you sort of look back, what are the kind of big moments for you?
We look at 2024 as a transformational year for ATHA, obviously. We're a relatively new company. As you know, we were listed in 2023. We got into a three-way transaction where we acquired two other companies. We acquired Energy and Latitude Uranium, closed both of those throughout the year, and then set to work with one of the largest exploration projects and campaigns across the uranium space throughout the year. And, you know, a bulk majority of that was focused on our Angilak project. That's a 43 million pound resource. We drilled 10,000 meters, 25 holes into that project, and every one of them was successful. All expansion work, everyone hit mineralization. So yeah, I think it was a big year, Matt, despite a weird year in the uranium space and in the equity markets, a weird year, but a very strong year for ATHA to deliver on what we were trying to deliver on.
Yeah, for sure. And the weird was more about the macro than you guys specifically. And it seems that the thematic keeps on moving forward. Supply demand gap widens all the time. East-west divides. Possibly bifurcation of markets at some point, because I'm trying to work out how much is heading east and how much is heading west. Today, I want to kind of, if you don't mind, kind of maybe sort of set out the stall a little bit as much as you can for 2025. Last time we talked, you said, right, we're going to spend about 70% of our efforts on Angilak. We've got a lot of pounds there now. Maybe just remind people what you have, and I guess more importantly, what you think you need to do to ram home that kind of value proposition on Angula.
So what we have, Matt, let's start there. Okay, so we've got a project in Angulak that is one of right now one of the most significant uranium projects in Canada in terms of the existing resource. 43 million pounds at 0.69%. Just to contextualize that, you know, those grades are directly, you know, Eagle Point, which was, you know, an underground deposit that Cameco has as a chief geologist there for a number of years, has an average grade of 0.7. You know, so 0.69, 0.7 right there. Large uranium resource and growing. You know, I mentioned the work that we did in 2024. That was all focused on expansion drilling. So we didn't do one infill hole. It was all expansion work. And all of that, every hole was mineralized. We modeled that work. We modeled those results. And what we did was we wrapped an exploration target around it. So now we have Angilak that's sitting at, you know, 43 million pounds. We've got an exploration target based off drill holes in the ground and exploration results from assay results, drill holes in the ground, with an upper envelope of 98 million pounds. And what we think about that in the context, we think about that as now a de-risking event through resource growth at Angilak to continue to move the needle higher. And, you know, why that's important is, hey, we're looking at scale. We're looking at a project with significant scale here. We're looking at de-risk resource growth now in 2025. And to get to a threshold, a tipping point that moves this project forward into a development stage. Because when you look at the uranium market as a whole, and you look at, you know, companies that have assets under management within the Canadian uranium landscape that are pre-production, you're going from names that we know well, right? You're going from NextGen to Denison, you know, to ISO, etc. Fission, now Paladin. And you look at the valuation of those companies on an enterprise value per pound basis, and you know, take round numbers here. On average, you know, they're looking at, say, 6 to 12, depends on NextGen if you use measured and indicated, etc. But we see a significant opportunity there to add value to our company through resource growth, and then a function of that resource growth, see a re-rate in the market as a function of that growth.
Right, and I think the thing that intrigues me about what we started to see in 2024, and what conversations we already had this year, is that having people understand your plan is so important, because there are plans that get rewarded and there are plans that don't, right? And this is not just, in the gold space, which I think is hilarious, because you kind of got gold at all-time highs, and yet gold exploration companies can't get finance for toffee, right? Or super expensive money. The gold companies that are getting rewarded are advanced development, like near-term revenue stories, or the producers, right? Because the money's coming out of there. Lithium is trying to take a leaf out of their book, and they're trying to follow the same model of like, we are really in the dirt here, because in terms of lithium pricing. So some of them are saying, well, how do I move our project through to something that can actually get finance? Because if we show maybe a near-term production profile. Uranium, equally technical, commodity metal. I've seen people like you or Energy, I've seen people like Encore, Peninsula more recently getting into production. They're getting rewarded for that. You've got models like, obviously UEC and Denison buying up everything, and it's an M&A model. For someone like you picked up, you've done the M&A bit, you picked up quite a big asset, 43 million pounds, a nice starter project, and building that up to, to 98, 100 million pounds is fantastic. But what do you think you're going to have to do to kind of stand out in the market and get rewarded for that?
Yeah, I think, from my perspective, Matt, it's, we look at it, it's about advancing the project, right? In a real way, showing that the project is on a track and has a step to get to exactly what we're talking about there, right? And that's why we bought the project. That's why we bought it off of Latitude. We viewed this project's in a district, in a jurisdiction that has a very high metal endowment. It's not only the exploration target that we're talking about, so you have Angilak that's at 43 million pounds. Now we have an exploration target with 98. That's only within a very small window around LAC 50, which is a resource. Okay. Then you layer on top of that, we've got a great team of geologists, Matt, and they do good work. And in the field this year, out mapping, they defined an outcrop that's about 3 kilometers long that has multiple high grade expressions on surface and doesn't have a drill hole into it. Okay. And so you're talking about a project that has, and that's just within LAC 50. Then you go outside of that, and we're right at the edge of a sandstone basin. And for the first time now, we have data that allows us to see through that. We just completed an MMT, mobile magnetotellurics survey that for the first time allows us to image targets, through the sandstone cover in that basin. And what did we see? We saw a trend coming off of an area called Rib. Rib is an area that had some drilling in the past, had 5% U3O8 in drill core, and leading right off of that Rib area underneath this basin, we've got about a 25 kilometer long EM trend. And when you start to talk about things like that, now what you're talking about is Athabasca style targets and exploration potential, right? So where are we going with this project? We're moving the envelope forward. We have a de-risk, now in our view, a de-risk path forward to resource growth, that 98 million pound window. We're going to continue to move this thing higher in terms of the exploration potential above that. And it's marching towards a development stage. And that's our objective, is to mature significantly, because there's value in maturing.
Okay, so development stage, my ears pricked up there, because that is moving closer towards money. Money's the important thing in this game, right? Where, obviously historically, juniors would, raise the money, go drill, raise the money, drill, etc. Right? And you could do that. What wasn't a problem. I think what we've seen over the last 4 years is that's become harder. That's going a lot harder. And when I talk to investors from the tech space, they're going, man, this takes forever to get into revenue. It's like, at least with, technology investment, I know within 2 years if it's working or it's not working, it's kind of our equivalent of kill to drill. But so for new money from outside looking in, this long drawn out, what could be, should be, maybe process for mining, it's not resonating anymore. Retail has been damaged. So when you say moving towards development stage, what does that look like in terms of a time frame for you, in terms of deliverables that you're going to need to focus on to be able to kind of get there?
When we look at the project technically and objectively, Pat, we like it. We like the profile, we like the grade profile. Our critical path to get there goes through growth, goes through resource growth, which is why we took the approach that we did last year. Widely spaced drilling outlined that envelope for resource growth to get us there. So 2025 is going to be delineation of some of those corridors that we already defined with exploration work in 2024, which is just, our team's been through this process before, okay, in terms of resource growth, resource development, getting into development stages, mining stages, etc. And what the work that we did last year set us up to do is, become much more predictive than reactive within how we're investing capital at this stage at a project level. And we like that, right? So we're moving into a process now where it's about resource growth. It's about resource growth throughout this year that then has the potential to have us within that stage where we're thinking conceptually, what does this project look like in the subsequent year?
Do you think in the market, they'll say you hit like 98, 100 million pounds, do you think that's good enough to get going? Clearly there's more. You're drilling, you're right part of town. Is it going to be enough to get going and just going to move towards that? I say, you talk about development stage, talk about economics, talk about revenue, things like that. That seems to be the kind of keywords for some of the big funds. They're seemingly not to kind of wait around for a 20-year return. So again, what are the numbers you think you need to hit? What are the deliverables you think you need to hit on that side of the equation?
Yeah, we like that. Obviously, Matt, we need to do the work, right? Like we haven't done the study work, etc. You know that, we know that, but we've also been in the business long enough to understand that we can run a DCF, a discounted cash flow model, as others can, right? And we look at that envelope of resource growth that we have wrapped around Angilak, and we like it. We like the size of that project and what that would represent then at a project scale, and so that's our objective is to march towards that. But that there's also that uranium is a unique commodity for a number of reasons, and one of them right now is the scarcity of assets across the North American landscape, right? And so our view is that there are very few assets that are moving forward. There are very, and the scale that we're talking about here at Angilak, puts it within, if you run down assets that are in that kind of development stage within publicly traded companies right now, pre-revenue, it's in the top 5, right? Like it's a top 5 scale project within the Canadian uranium landscape, if not globally. And so then what does that mean? There's a significant scarcity in projects that are moving forward. And you talk about the current markets, and I think that there is there's definitely a challenge within the micro cap space, and the retail markets weren't what they once were. You do see companies that are, you look at the growth curves associated with some of, the more mature companies, more development stage companies within our space. And they've been rewarded. You look at the performance over the last few years, last 3 years, last 4 years, on companies that have been building assets, moving them forward, maturing them. And there's a lot of value that gets generated within that curve.
Okay, so let's look at when you say it's top 5. In what do you mean in terms of like the amount of pounds that you're able to declare, in terms of can you say it's a tier 1 asset? And if you do say tier 1 asset, does going early in terms of getting into development damage that? Again, what are all the variables that you have to consider?
Yeah, the variables that we can, when I say top tier, I mean in terms of scale, right? You talk about how many, you look across the uranium assets across Canada in that bucket that we're talking about. Obviously, Arrow leads the way. Arrow is a fantastic resource, 336 million pounds of uranium hosted in the basement rocks. Next, then you go down and you're looking in the mid 100s for triple R. And then you go down from that and you're kind of sub 100 million pounds. So in my view, any uranium project that has the potential to have over 100 million pounds, I would definitely consider that tier one scale. There are very, very few of those. And so that's what I would talk about in terms of the scale potential and how it would relate to, the rest of the market. And the reality is there's just not that many of them. And it's going to require all of them probably on the list that I just talked about to come online, plus more to meet the growing demand in the uranium space that is already, when we talk about demand, we're talking about base case, we're talking about large scale civil reactors and utilities that already have long-term projections that this demand is going to be needed. You start to layer on some of the more recent conversations around SMRs, et cetera, and that demand profile even gets higher. And then, you talk about tier one, and then you also have to think about geopolitics and jurisdiction. And to have the ability to be working on a project that we believe has scale potential, like we're talking about in a jurisdiction like Canada, is another significant benefit.
Okay, and with regards to the allocation of your time and effort, you're saying that you talk about this sort of 70-30 split. That Angilak is important to you. You think you still think, from what you saw last year, that's the best allocation of not just dollars but your time. You feel you get rewarded the most for that. And by rewarded, I mean driving that share price, moving that market cap.
Yeah, it's two things. Okay, I do. I think it's a balance of risk and probability as well. The ability for the work that we do, the allocation of capital that we're going to put into Angilak, driving that project forward to then generate value back for shareholders. I like that profile, right? I like that profile based off of the technical risk profile that we now see at the project. But in addition, you talk about then overall value for ATHA. And as you're aware, we're also a very large scale exploration company over and beyond Angilak, with around 8.5 million acres of exploration property throughout the Athabasca Basin, the Thelon Basin, et cetera. And we're going to continue to explore. And so then the torque, the discovery exposure outside of a resource that's moving forward, and then uranium discovery exposure within the best uranium jurisdictions in the world is also a value driver for us. That exploration component, the discovery potential as a function of that. We've worked hard to balance our portfolio like this and manage our allocation of capital internally in a way that we think provides the most value for shareholders.
Right, and obviously we've got Gemini in the background. I think the former CEO reached out to me recently. They're chasing something down in Argentina now. A lot of M&A happening out there. Do you feel that you will continue to be participating in any potential M&A activity in 2025? Again, does that make sense at the right price?
Yeah. Hey, we're in the uranium business, I guess, right? And so I would never sit here and say no. We wouldn't look at something that made abundant sense. But with the M&A that we've done and the value that we've added through the work that we've done at Angilak, and then the work that we've done in the basin, and we've invested significantly in our land position in the basin as well. And we have a large pipeline of what we consider high priority, high value exploration targets that are backstopping that. We're heads down. We're focused on adding value through the work that we're doing. That being said, we're in the uranium business, and we like to we stay current, we stay smart on opportunities, and we mentioned 2024 as a bit of a strange year, kind of on the macro, and then as that relates to the equity markets, and there's a big wedge now, right? You look at the macro sentiment continue to build in a very, very positive way, as positive as I've ever seen it in the uranium market throughout 2024 and continuing in 2025. Underlying equities, not a bit, almost completely decoupled and disconnected from the macro sentiment. There's value there. We see value under that curve. And so, if it's, I wouldn't sit here and say that we would discount a value accretive opportunity at the same time.
Yeah, I think it's important to have a realistic view of the uranium market. pluses and minuses and kind of where you sit. And sort of, so I'm always intrigued why, how companies deliver that. They've got to have a plan. They've got to have a strategy for delivering that plan, and the team to do so. So with regards to sort of non-Angilak assets, you're going to have to sort of, again, manage those. I get the exploration, but I'm not talking about the exploration, but you're sitting on a lot of land package. You're sitting on a lot of potential, but with the potential comes the liability of needing to fund that. So again, what's that look like in 25?
Yeah, we've got a pretty straightforward process, Matt. We've got, we've invested significantly over the last 2 years, probably more than anyone else in the space. Not probably, I think more than anyone else has in the space in terms of maturing a land position. That goes into a process and that is about ranking, ordering, and prioritizing exploration projects. We look at anything that's within, say, a 2-year exploration window as being, within our program as being self-managed by ATHA. Then in addition to that, anything that doesn't fit within that kind of Gantt chart, that 2-year Gantt chart, we look at the opportunity then to leverage our land position into farm out agreements, pull value forward for our shareholders, pull discovery opportunity forward off of our balance sheet, by partnering with others in the basin. That activity, I fully anticipate will pick up in 2025. It was there, late 2024, late 2023 into 2024, obviously following the spot price of uranium. Got a bit quiet throughout 2024, understandably, but the amount of inbounds that we have coming in now is significant. We see early indications of that type of activity picking up again. We think 2025 is going to be a stronger year.
Okay. Yeah. Well, Troy, I just wanted to catch up before you get going. I think we agreed before the call. We'll probably see you at PDAC, where you maybe perhaps lay out in a bit more detail the plans for 2025. And maybe even a few more results might be back heading this way. Do you think?
Yeah. Hey, ideally, we talked a lot about Angilak. We also have the exploration at Gemini. We've got assays that are still at the lab. A bit frustratingly, obviously, as you hear across the sector right now. But we anticipate those will be back in advance of PDAC, et cetera. We've got, we'll have the opportunity to catch up again then, and we'll outline the full year 2025, what that's going to look like. It's going to be another exciting year, another big year for ATHA.
Yeah. You guys achieved a lot last year. Hopefully the markets react this year. I think all uranium investors will hope that's the case. Price discovery will be nice for sure. So look, Troy, I'm going to let you go. I'm dashing down to London. There's a bottle of red wine waiting for me there, and it'll be gratefully received. So I will see you soon. Thank you.
Yeah, thanks, Matt. Appreciate it.